You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. It is time once again for everybody's favorite futures options program. Dare I say it, one of the only. It is time once again for TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a week it has already been here on the network. Great pro Q&As, great Education Wednesday, everything else. You want to check it out for yourselves. Of course, most of our shows are available on demand on just about every platform under the sun. If you want to go above and beyond, you want to check out all the exclusive content we have for you and everything else there in the Secret Club. It's just easy. You just go to theoptionsinsider.com/secret club. That's all you have to do. Is don't tell anybody. It's a secret. And of course, however you listen, live after the fact, keep hitting us up. Questions, comments, insights, pearls of wisdom. We do love to hear from all of you folks out there. We'll be hearing from Mr. Tim McCourt, the guy who holds the hot seat over there at CME for all things equities and crypto, coming up in a little bit later on in the show. What's going on with these micro ETH futures they just launched this week? We'll find out. Is CME going to do anything about the crazy position limit drama over there with the BITO ETF? We'll find out. What's going on with equities and everything else? We're going to find all that out in a little bit. But before we get there, we have to kick things off the way we always do. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show we break down everything that's lighting things up to the light side, a.k.a. the upside, and to the dark side over there at CME Group this week. And because it's just me kicking off the show here, I get to choose. I finally get to choose, listeners, which way we go. And you know what? Everyone goes light side, so I kind of have to be the dark side guy. Let's mix it up. Let's go dark side. By the way, you guys can get access to this report yourselves if you follow CME Group on Twitter, or if you follow us. We always tweet it out right before showtime. It's one of the few reports you can't access on the basic version of TWIFO, the CMEgroup.com/TWIFO version. You have to have the upgraded report to get this, upgraded tools and account to get that. But luckily for you, we like you. So we share this one out right before showtime. And if you looked at it, you'd see it's an interesting week. Another one is kind of split, even though more size movers are to the top 5 than there are to the bottom 5. But net, it's about almost exactly 50-50 in terms of how many names are gaining versus how many names are losing this week. But to the dark side we go. Number 5 to the dark side, lean hogs off 3.56%. Another crazy week for the livestock there. Number 4, KC wheat off 3.58%. You know, KC wheat, not exactly the big volume leader out there. You have to go to the SRW wheat for that. By the way, KC wheat, number 5 in the same direction last week, off 5.81%. Number 3, we got the old euro dollars, 3 3/4 to the dark side. Number 3 in the other direction last week. Number 2, nat gas, off nearly 6%, 5.97%. It was number 1 to the dark side last week, and minus 21.68% last week, listeners. Took a huge drubbing last week. Continues to take a drubbing out there. So something's calming it down out there, listeners, as we get to off another nearly 6% this week. And Bitcoin, not a good week for the crypto bulls, off 15.21%. It was number 4 in the other direction last week, up 4.31%. So an interesting topsy-turvy week. Of course, check out our crypto rundown program if you want to learn more about all the action going on in the world of crypto. Let's go to the upside now. Boy, a lot of energy in the top 5 this week, listeners. Number 4, our old friend WTI back in the top 5. Nice week this week, up 7.85%. It was number 6, right outside the top 5 in the other direction last week, off 4.84%. Number 3 is Brent, up 7.88%. You getting the theme here, listeners. Number 2 is RBOB, up 9.19%. And number 1 with the bull this week, once again, lumber, up 12.01%. It was in the same position last week, up 15.9%. So another crazy couple of weeks for lumber. But let's kick it off since energy is really dominating our top 5. I think we have to hang our hat there first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, let's do it. Let's talk some energy. You guys know where to go to get these reports in your hot little hand. CMEgroup.com/TWIFO or /TWIO. Both of those should get you to the same place. Once you get there, you'll see this asset class drop down. Scroll down past ags, past cryptos to energy, and then hop on over to the product family. We're going to start our journey this week in WTI. So go to crude oil there, pick up the WTI, the top version there. It's easy to see which one we're talking about. That's where all the paper is. And once you do that, that'll get you here. It'll give you an interesting layout here. It'll be our This Week In report where it breaks down everything, all the hot action across the various expiration months, the skew, the volatility, how much those things have changed over the course of the past week, the hot contracts, a whole bunch more. There's a lot of data buried in these reports, and we give them to you for free. That's how much we like you guys. And let's go out here to the TWIFO report now. For WTI, you'll see that it's a pretty active week. Just as we were talking, listeners, just ticked over 500,000 contracts, 500,000, pretty much exactly on the tape right now. And of that, 37%, so the most active contract is actually the Jan expiration that is going out in 6 days. So WTI trading like an equity this week. We're going to go a little bit farther down the chain, listeners, because it's hard to really make meaningful analysis of the skew and vol with only 6 days to go. So let's go a little bit farther out. Let's go to the February contract. That has 36 days to go. That also did a pretty active amount of contracts this week as well. 22.6% of the paper. So nearly a quarter of the paper going up in the Feb contract. So a good place to hang our hat out there. I said coming into showtime, we're at about a 70.5 or so in WTI. So back in the 70 handle after that drubbing we took on the heels of all the OMICRON news. Is that going to kill demand again? Well, we saw a 60 handle for a while, now back in the 70 handle range. What are the options telling us? People think it's going to be more upside or more downside to come? Let's find out. First, let's dive into the vol. The vol coming in pretty aggressively this week, listeners. Again, it's because we've been seeing a bit of an equity-style skew in WTI for a while, where the puts were bid, the calls were offered. So as you rally in that environment, listeners, you're going to see the vol come in. That's pretty much what we saw here. 43.61 is the Feb vol right now, off about 12.5 points. That's a big decrease out there. As we move up that skew, vol coming in. Speaking of the skew, let's look at it right now. Let's see if it's the same as it was last week. Last week, the puts were 18.1% rich and the calls were 10% cheap. So it was a demonstrative bid to the puts. And this week, it is even more pronounced in both directions. The puts are more bid, 21.3%, and the calls are cheaper, 16.3%, which again is kind of what you expect. As you move up the curve, you expect that skew to rotate a bit, with the at the money being your axis. So then the out of the money call should get a little cheaper and the put should get a little bit more bid up. And that's pretty much what we saw out here this week in the Feb contract in WTI. In terms of action, where the most action was, it seems like the 75 strike was your contract du jour. The most active one was in that Jan contract going out in 6 days, doing about 14,500 contracts. The big day was Tuesday, about 6,400, about 2,000 today. So pretty active day today, about 3,000 yesterday, and about 3,000 again on Monday. Most of that opening throughout the week. So opening on the 75s, opening selling transactions out there. Either way, opening paper to the upside, but skew coming in. So interesting stuff there. Again, if there was a preponderance of buying to those calls, you'd expect to see that bid stay a little bit firmer in the calls, but we did not. The Jan contract got annihilated from 7.1% cheap to 14% this week. So interesting stuff. Also, we got, let's see, number 2 right behind it are the 70 calls, which again are pretty much the at the money strike now. 12,300 of those. Most active day was Monday, 4,500 on Monday, 3,300 on Tuesday, 2,700 today. These were closing. So as we threatened and I guess now broke through the 70 strike, folks are taking those off and maybe they're rolling up to the 75. So maybe it could be a case of rolling some of those shorts. That could be the case out there as well. Buying the shorts on the 70s, rolling up to the 75s. That would account for some of those skew changes that we saw out there. And the number 3 we've got right behind it. Let's look really quickly. Yeah, it looks like it was the 65 put. So it wasn't all calls all the time. There were some puts lighting it up this week as well. Again, in that Jan contract, 10,000 almost exactly. The big day was yesterday, 3,300 yesterday, 2,900 on Tuesday, 2,850 on Wednesday, and about 1,000 today. Mostly closing throughout the week. So folks, I guess as we moved away from that 65 strike, decided to get the heck out of Dodge. Let's go a little bit farther out now, see what other kind of prints we saw. In our Feb contract where we were hanging out earlier, that 80 calls were the most active out there with about 10,000 of those going up this week. Most of those actually closing, which is kind of interesting. Also going a little bit farther out, the par calls. So if you think, 80 strike, not rich enough for your blood, you want to go out a little bit to December of next year, you want to get a little bit of upside action, the par calls in Dece of next year were also pretty active. 6,300 of those going up, almost 2,500 on Monday, slightly opening, and then almost 2,500 again on Tuesday, slightly closing. And about 1,500 on Wednesday. Not a lot going up today at all. So a little bit of back and forth on that par strike out there this week, listeners, which is kind of interesting. But since we're hanging out in energy and energy is dominating our top 5, let's keep the party going. Let's go on out to another product a lot of you have been intrigued by of late. This is nat gas. Go to that same drop down, listeners. Stay in the energy product family. Just go one down from crude oil. You're going to see nat gas right below it. Click on that, choose the top product there in the nat gas group. You'll see that's where all the paper is. And you will be off to the races. Coming into Showtime, $3.79 in nat gas. That is a lot lower than people were thinking at this time. Listen, if you looked at, of course, to the term structure, what they were pricing in, they were pricing in a heck of a lot more than $3.79 at this point. They weren't expecting to see these levels again until after March of next year into April, after spring kicked in and the thaw kicked in. So interesting stuff. Something is conspiring to really crush the levels out there in nat gas. Also conspiring to put up some paper. Nat gas threatening WTI right now, 423,000 contracts on the tape right now for nat gas. And of that, the front contract, once again, this is a lot of near dated paper in both WTI and in nat gas. That's kind of reflecting what's going on out there right now. Usually these products don't trade this way. Usually these products aren't all front month, or in the case of WTI, front week all the time. Usually it's a little bit more spread out than that. But in this case, there's a lot of action. Things are moving hot and heavy. Vol is high. You want some gamma. You want some near-term exposure to these things. So people are playing in very near-dated contracts. There are no weeklies here in nat gas. So the closest you can get is that Jan contract that goes away in about 19 days. I wonder if after this explosion of paper this past couple of months, maybe they'll reconsider the weeklies out there. The Jan contract right now, by the way, so we're at 379 in nat gas, off 8% this week. It was off 6% from our show last week. And the most active contract, I said, is that front Jan contract. Did about almost 28% of the paper this week. So we're going to hang out there. The next most active was about 17% in March. So it really is mostly front month out there. In terms of the vol has come in. Remember, nat gas won our poll just a few weeks ago. It was the most active tradable product we had in there, with a lot of other volatile things like Bitcoin, like Tesla, like VIX, and nat gas trumped them all. It was right around a 99, I believe, when we were doing the poll. Coming into today, a lot lower, 66 and a third, off another 6 points just this week. So that vol has come in about a third just since we ran that poll a few weeks ago. Again, reflecting the somewhat surprisingly aggressive sell-off we're seeing out there in nat gas out there, taking a lot of the vol with it. In terms of skew, a big change over the course of the past week. Last week, the puts were only 4% cheap, and the calls were where the action was, 5.9% cheap. This week, the puts have gotten a lot cheaper, 13.2%, and the calls are much more bid, 14.3%. So if you looked at this skew just apropos of nothing else, listeners, here in this Jan contract, you would think they were going to be fading a lot more near-term downside here and turning around for a lot of upside, a 14.3% premium. So again, we're talking at the money vol of 66%, and you're talking a 14.3% premium to get those at the money, or I should say those 25 delta calls out there. So folks are bidding those calls up. They think maybe this is a bit overdone. Either way, that's what our skew is telling us out here right now. In terms of the most active contract this week, it was the Jan 3.5 puts, listeners. That's where pretty much the lion's share of the action was. They did about 13,000 contracts this week. The big day was Monday, 6,700. Monday was obviously a big day for the energy market. That's when we first came in after the sell-off. Are we going to keep going off with this madness, or is something else afoot? And we saw a lot of action out there on Monday. 6,700 contracts, most of that opening. Tuesday, 1,600 contracts, only slightly opening. Wednesday, 1,300 contracts, slightly closing. And today, about 3,200 contracts on the tape. Behind that, we saw, looks like about the 4.5 calls. So out of the money calls here going up about 11,500 times. The big day was Tuesday, 4,400 for those, 3,500 on Monday, 2,600 today, and only less than 1,000 yesterday. But most of that opening throughout the week. So perhaps that accounts for some of that bid we're seeing popping in to the call wing there. A lot of opening paper on the 4.5s. Guessing there's some opening buyers. Some folks might be thinking, you know what, this sell-off is a little bit overdone. We weren't supposed to be here for quite some time. So maybe some folks loading up to the upside in nat gas. Do you agree, disagree with that, listeners? What are your thoughts on all this nat gas maelstrom of paper that's hitting the tape? Number 3, we got the 4 calls. So pretty close to at the money now, about 20 cents out of the money calls. These were number 3, 9,300 of these. The big day, again, Monday, 4,200 all opening, 2,000 on Tuesday, also opening, 1,100 on Wednesday, also opening, and today about 2,000 more on the tape. So opening 4s, opening 4.5s. Got to wager a lot of buying on those two to see this dramatic bid we're seeing keep popping up there into the calls. Let's look a little bit farther afield. We've got right behind that, we have 3 puts. So if not all upside all the time, listeners. 3 puts doing about 9,000 contracts this week. The big day was Tuesday, about a little over 4,000. Again, most of that opening. Monday, about 3,000. Good chunk of that opening. And then Wednesday, about 800, not that many. And today, about 1,100. So mostly opening this week on the 3 puts as well. Kind of a crazy, interesting time. I know we said Russell Rhodes on the show not too long ago. He was surprised at this sell-off. I'm sure a lot of people are surprised at the aggressive nature of this sell-off out here in all things nat gas. Speaking of aggressive sell-offs, listeners, we can't bury the lead anymore. Mr. Tim McCourt is waiting. We have seen a pretty aggressive sell-off recently in all things Bitcoin, of course, from peak to trough, about 17,000 points at one point. Mini flash crash over the weekend, of course, recovering some of that now. In addition to that, we, of course, had the launch of a new product in an area a lot of you like to focus on in the crypto space. Forget about Bitcoin. You guys are all up on Ether. Well, a mini ETH future launching just this week over there at CME. We'll get to all that, what's up with the BITO and the position limits, the equities, and a whole bunch more as we toss it out now to the cryptocurrencies.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everybody, welcome to this special early edition of the crypto segment here, recording outside of our usual time because it's not our usual week. There's a new product hitting the tape out there, so we wanted to make sure we had time to talk about it here on the show. And I'm pleased to be joined now for this segment by the guy who talks about all things crypto over there at CME, Mr. Tim McCourt, the Managing Director and Global Head of Equity Products. He also hangs his hat in a crypto or two over there. Tim, welcome back to the TWIFO program, sir.
Mark, always good to be here. Looking forward to today's conversation. Certainly an exciting week at CME with the launch of Micro Ether yesterday. And excited to talk all things crypto.
It's been a rare 2-month hiatus since you last joined us. You last joined us exactly 2 months ago on October 7th. Since then, you've been a little busy. Things have been popping off in your neck of the woods. But let's get to what we're here to talk about today first, which is, of course, the launch of the latest addition to the CME crypto offering. You know, we've been talking about Bitcoin futures for a while. Then you had micro Bitcoin futures. And, of course, you finally had the options out there. Then fast forward to ETH. And now people have been waiting for a while to get their hands on a bite-sized ETH contract. And Tim, you finally delivered one for them this week. What did you guys launch actually just yesterday as we're recording this, sir?
That's right. You know, it's certainly been something we heard increasing in popularity from market participants and all your listeners out there is that given the success not only of Bitcoin and Ether, but of micro Bitcoin that we launched back in May, people really wanted that smaller size micro Ether contract and super excited to have it launched yesterday. We're off to a great start. The CME micro Ether futures are now officially live and available for trading. And it's, you know, just like its older sibling, the ETH contract, the symbol for micro Ether is NET, and it's based on the CME CF Ether dollar reference rate, which is everyone knows now is the once a day reference rate of the US dollar price of Ether. It's based on the same consistent exchanges, so Ether dollar transactions from Bitstamp, Itbit, Coinbase, Gemini, and Kraken, which represent a pretty wide swath of the Ether US dollar fiat spot trading. So it's very exciting. I think the one thing to note, though, is it is just like micro Bitcoin. It is 1/10 of one ETH in terms of the size. So as you remember, you know, what's interesting is when we introduced or announced the regular Ether size contract, Ether was trading $400 or $500 per ETH. Now at $4,300, I think today, this will place the micro Ether at about $400 plus in terms of contract value. Very right sized and precise to enable some of that scaling, that trading up and down that people like to do. What I'm really excited about, just a lot of like the other micro contracts CME, whether micro E-mini, micro WTI, micro Treasury, is it allows you to put a little bit into the asset class. You know, this is not necessarily the same capital commitment required if you wanted to get involved in cryptocurrency trading. You can now put a little bit of your portfolio in it and still trade lots of other great things at CME. So super excited about micro Ether, and I think it's going to be really welcomed by all the active traders out there, as well as the institutions who are already involved in crypto at CME.
We've been hearing this for a while from our audience on our Crypto Rundown program. There is a certain definite strong element of the audience. I mean, Bitcoin gets all the headlines, it makes all the waves out there, but there is a enormous segment of the audience who really focus primarily on ETH. That's kind of their number one crypto asset and all of the related products that swirl around it. So I know for a lot of them, they've been waiting for this day because you launched the ETH future, but as you mentioned, it was a little bit big for a lot of the retail audience out there. Now you have this smaller 1/10 of one ETH size contract. I know it's only been a day, Tim, but how are we looking in terms of numbers? I have to imagine this one's probably going to resonate with a lot of people.
Yeah, for sure. It's also a great start. So yesterday we traded a little under 1,000 contracts, which is great for any first day of trading of a new futures contract. And we have just a touch under 700 contracts that remained in open interest, which is also great to see. When we launch new contracts, we like that interrelationship between trading volume and OI. We like those numbers to grow together. So it's not people just kind of flipping in and out of the contract on day one. People traded it, they held it, really reaffirming that value prop that we had, that this is a great way for people to access the Ether or to access the Ether market and gain some of their exposure in these now smaller right-sized contracts. We've seen great participation across the globe with flow coming out of the U.S., Europe, and Asia. We saw trades go up Sunday night at 6 p.m. Eastern when we first turned the machine on. And we're seeing a growing number of accounts today, which is day 2 here on the 7th, and off to a great start. I'm really excited. We're actually seeing volume also in the front month, December, as well as the next month, January. So already getting some volume spread across the curve, which is great, 2 days in. And really pleased with how the first few days have gone here for Micro Ether.
Interesting time to launch a new crypto contract, of course, around the tail end of a bit of a mini flash crash out there in most of the leading crypto over the weekend. Now, of course, coming out of that tail end of that and ETH having a bit of a rally. So an interesting time, Tim, to be putting a new contract out there. I know you announced this a while ago, so you can't really change the date now, but was there any consternation going into that date, seeing all the madness unfolding over the weekend?
No, it's a good question, but I think actually it makes it a little bit more exciting, right? Because when we think about some of the central benefits that the futures contract provides, it's really either to access the market or hedge existing positions. So regardless of the direction of travel, if it's red or green for the day, a little bit of price action always helps remind people of why futures are beneficial in terms of their trading strategy. And I think when you look at now the micro-sized Ether contract, at 1/10 of an Ether, 1/500th of its older sibling, the ETH contract, which has a 50x multiplier for Ether. It also certainly reminds people of how a smaller contract can be helpful if you are trading in these maybe faster markets where the price action is a little bit elevated versus other days. Now you can scale up or down in much smaller size capital increments. Again, $400 to $500 a clip per future. So I think it also gives just a more useful tool to be more precise, especially if you're seeing a pretty wide trading range for the day, positive or negative. Micros are a great way to take part in some of that price discovery action.
Speaking of that recent sell-off and now somewhat of a return to normalcy out there in the crypto space, obviously we've seen a resurgence of vol recently, resurgence of volume across the board. What sort of interesting trading developments have you been seeing over there across the crypto landscape at CME in light of this massive move? We saw, I think, 17,000 handles at one point from top to bottom in that sell-off in Bitcoin. What kind of numbers have you been seeing over there at CME during that, Tim?
Yeah, so it's interesting. So just looking at the month of November, so it's the last full month of performance we have here, which November saw a fair bit of action, I would say, in terms of price as well. The BTC futures, the OG, as I like to say, the 5X Bitcoin contract did almost 10,000 contracts a day in November, worth 50,000 Bitcoin equivalent. And the OI for the month was 15,000. So really going strong. And then when we look at Ether futures, which, are only a few months old, not even 1 year old here in 2021, they traded 6,000 contracts a day in the month of November, again, with an average open interest of about 5,000 to 6,000 contracts per day. So when we look at that in terms of Ether, almost 800,000 contracts have traded since launching back in February, which is the equivalent to 40 million Ether. So when you think about that, that's a lot of price discovery, a lot of interest. And when we look at open interest, again, we like to look at volume and open interest, because open interest is a great proxy for adoption and those people using the futures contract as a primary access vehicle. We had a record open interest in Ether back on November 29th, with just under 5,800 contracts in the futures, which is just under 300,000 equivalent Ether. So when we're looking at these markets, they're really coming into their own in November. And micro Bitcoin certainly not slacking off, with almost 28,000 contracts a day trading in November, averaging an open interest of almost 32,000 contracts for November. So this is great. And then when we look at micro Bitcoin and Bitcoin, and then the adoption of Ether versus Bitcoin, Ether is adopting it at a quicker pace than Bitcoin in terms of reaching some of these numbers, reaching some of these milestones. So we think micro ETH, if it continues, it's got some large shoes to fill in terms of the other contracts that we've already introduced, but certainly optimistic about how it will do given the backdrop of not only the price action, but the continued volume and open interest growth at CME in our BTC micro Bitcoin, as well as our traditional Ether future. I think it's a great backdrop for micro Ether to make its debut this week.
Well, the last time you and I chatted, Tim, like I mentioned, was on October 7th. Since then, a few things have happened in the market, including a tidal wave in the crypto space, which was the launch of the ProShares BITO ETF, which, of course, cues off of and trades off of your futures over there at CME. I'm hard pressed, Tim, to think of another product that launched recently that got as much attention as this thing did. I've said it before. This is the fastest I think I've ever seen OCC on the equity options front list options from the listing of the underlying to options. I think we had them in our hands within 48 hours. It might have even been faster than that. I can't recall any other hot IPO ever on the planet getting options listed that quickly. So clearly there was a lot of attention on this. I also can't recall the last time so many people hit me up about things like negative roll yield and position limits, all these things that are relatively esoteric were suddenly top of mind and being discussed all over the place. Tim, your position limits were the talk of the town everywhere. I'm curious for you, what were your thoughts on the just explosion? And were you as surprised as I was by just the amount of attention that swirled around the launch of that BITO product, Tim?
That's a great question. So what's interesting is we've always believed that the CME Bitcoin futures were the right product underlying ETF. This is even part of our strategy back to 2017, almost 4 years ago when we launched the Bitcoin futures, and why we were committed to that 5x multiplier is we were trying to introduce a contract that was also friendly in terms of a creation unit for the ETFs and structured products. So now, albeit I didn't think it would take 4 years to get an ETF based on our futures product into market, but it was certainly exciting to see that product come to market in October. The ProShares BITO ETF as well as the Valkyrie ETF based on CME Bitcoin futures. And when you look at the AUM that the ETF has continued to accumulate, it is impressive. There is certainly a lot of demand out there. And I think what's interesting is when you look at CME futures, it's a regulated futures contract that is based on a regulated benchmark, and it is very suitable for a underlying of an ETF. So we always knew and believed this day would come. And then when you look at the inflow, all of that dollar inflow from the ETF does get allocated to CME futures, which is why in the month of October, we reached a record, almost 17,500 contracts of open interest that was reached on October 25th. When we look at the CME futures became the number one futures on Bitcoin globally in terms of open interest by US dollar, outpacing some of the traditional unregulated markets such as Binance, FTX, et cetera. So this is something that we always knew and always believed in, but weren't quite sure when we knew it would happen. And it's been a tremendous boon, I think, not only for cryptocurrency, but I think for the regulated offerings. When you think about a regulated ETF in the U.S. market based on regulated CME futures, this is a trusted and transparent process and medium by which people can get involved in the cryptocurrency markets. And that's exciting. This is a market that continues to grow. And now having a very retail-friendly product in the form of an ETF that's based on the leading Bitcoin future at CME, that's a powerful combination and one that I'm excited to see grow from here. And congratulations, certainly, to our friends at ProShares for all their success in bringing BITO to market. Certainly, shattering records in AUM accumulation, and is only going to lead the way, I think, for additional product innovation in this space.
Well, you're right. It has been shattering records, and it was for a while there perhaps looking like it might be a victim of its own success. Of course, there are position limits over there at CME, and as this product continued to explode, and it seemed like everyone and their mother and their mother's brother and cousin all had to have a piece of BITO, they were getting pretty close to those position limits. I know early on you guys doubled them right around the period of the launch, I do believe, but there was a lot of concern that this would become another issue. We saw something similar back with USO. Obviously, they had the inversion issue as well. But in general, there was concern that, looking at USO, they had to adjust their exposure coming up against a lot of those limits. And as a result, the product became a different beast coming out of it. And the ProShares prospectus has within it the ability, if it does come up against a lot of different position limits, to start adding in a variety of other things, including what they term equities with crypto and Bitcoin exposure, which could probably impact the tracking. So a lot of people were worried that this might perhaps become a victim of its own success and get so big that it might not become the same beast coming out of it that it was going in that attracted so many people. We had the ProShares folks on not too long ago. I asked them if they were concerned about the position limits. They made it sound like it wasn't a big concern for them. I'm curious for you, Tim. This is your baby. This is what you and your team have to decide over there. How do you guys go about balancing this? Because obviously you talked about this being a regulated market. Part of that is risk control. So you want to make sure you do have a proper handle on how much risk any one product can have. But also at the same time, you want to be able to preserve the product. You don't want to force it to transform and become something else that is less attractive to the end user at the end of the day. So how do you guys walk that tightrope, Tim?
Yeah. So again, what I was just saying is, let's just say again that the approval of the ETF based on the CME Bitcoin futures is an important milestone for our futures and certainly a positive development for the broader Bitcoin ecosystem. And like I was saying, not a surprise. This is something that's been part of our strategy since the onset. So when we look at the risk controls and the controls that CME has in place to ensure the orderly price discovery of our contracts and the ongoing surveillance of our contracts, position limits is one of the many tools that the exchange utilizes to maintain that orderly price discovery and risk transfer process. For Bitcoin, though, as you mentioned, Mark, we did expand the position limits in the month of October. That took effect with the November contract going front month. But it's important to note that that only the front month contract is subject to position limits for Bitcoin. That front month position limit was increased to 4,000 futures contracts again on October 29th when that November contract became front month. There is a feature that requires as the contract approaches roll, that limit goes from 4,000 to 2,000 to maintain an orderly roll market. But when we go outside of that front month position limit, CME also employs accountability levels, which means beyond that front month limit, a participant can hold up to 5,000 contracts in any one deferred contract month and a net of 5,000 in one direction across all deferred contract months. So there's certainly plenty of capacity, to use that word, when you look at the 4,000 front month and then position limit and then the 5,000 contract accountability level for the next effective 5 to 6 contracts, depending if the December, that second December is listed in Bitcoin, because we always list the first 6 months and the next 2 Decembers. So we're not concerned in terms of market participants' ability to manage the inflows. And then there are also things which the exchange has at its disposal. We can always review position limits and increase or adjust them as needed. We also have the ability for market participants to request or apply for a hedge exemption, which our market regulation department will evaluate. There are lots of things that CME has that can balance allowing the product to grow in an orderly fashion that is not disruptive to the risk transfer or price discovery process, and balance that with our need to make sure that we continually have integrity in our markets. So I'm not concerned. I think there's plenty of capacity. We're constantly engaged with all market participants. And this is something, but to your point, I've never seen so much interest in position limits. And if anyone out there is still curious as to how they work, I just suggest they go to cmegroup.com and they can read all about the position limits and know what those various levels are by contract. But again, it's something that I think is been not an issue to date. And it's something we continue to monitor on an ongoing basis, as we do with all our contracts, not just Bitcoin.
You're right, Tim. I've never heard so many people interested in position limits. It's definitely a hot topic these days. So it sounds like you're with the ProShares folks. You're not too concerned that the position limits are going to negatively impact the BITO product going forward, Tim.
Yeah, I think, and I think the other thing to keep in mind too, is given the nature of how the product is designed and structured, as with other futures-based ETFs, the holdings are published daily and are publicly available within the BITO product, and they're very transparent about what they're holding in front month and what they're holding in deferred month. So this is something that I don't think people should be too concerned with, but it's something that everyone at the exchange is monitoring with respect to our surveillance and market reg department. But it's also something that if people want to learn more about it, all the information is out there, not only on the CME side, but also on the ProShares side, because the holdings of the ETF are made publicly available every day.
And, I'm legally obligated to ask you this next question, Tim, because, the Bitcoin complex is looking pretty good now. We have the Bitcoin futures, the micro Bitcoin futures, and, of course, the Bitcoin options. We're getting there with the ETH complex. It's almost complete. We got the ETH future and the micro future. You know what we're missing, Tim? So, what I'm going to ask you next. When are we going to see the options, sir?
Always a great question, Mark. And we always listen to our customers and all your great listeners out there. And I think when we look at the need for additional options in cryptocurrency, certainly something that we're hearing. And I think what I could say broadly, there's no plans at present to bring them to the market, but it is something that we're evaluating and interacting with customers and liquidity providers to see if this is something that makes sense. But I think broadly speaking, what I am encouraged by is when we look at the Ether offering at CME, it's growing at a much faster clip than Bitcoin in terms of adoption and utilization. And I think that really speaks to when you think about all of the customers out there, whether they're the active individual trader or an asset manager or a crypto native trading firm, as well as now you're hearing more and more chatter out of the sell side banks, is once an institution adopts Bitcoin and takes that first step into trading the regulated cryptocurrency products at CME Group, it's a much quicker step for them to move to Ether, because they've already have taken that first step into crypto. And once they understand Bitcoin, Ether, like Bitcoin, like all of our other financially settled contracts at CME, it plugs and plays, or someone likes to say and point out the term to me, which I love, is it's backward compatible with all their existing processes. It's easier for them to get involved in the Ether ecosystem once they've already adopted Bitcoin. So I think that will speak to a growing acceleration, or in terms of the cadence at which our market participants, our customers, are willing to take that step to the next product. They themselves are also needing some less time in between the product rollouts, which is great to see. So we'll continue to work with them to see when it might make the best sense to introduce or expand our crypto option offering at CME.
Well, Tim, we're coming up against it. We could probably talk crypto for the entire time here, but you also spend your day job when you're not talking crypto, talking about a little bit of equity. So let's head out there really quickly next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, Tim, last time you and I chatted, like I said, was a couple of months ago. Since then, we have seen some interesting developments in the broad equity market, in particular over the course of the past few weeks. We've seen the rise of this new OMICRON variant out there, which has spooked markets, caused multiple sell-offs and then multiple rallies. So we saw a lot of volatility coming back into the marketplace. Some of that has been squeezed out now. I'm curious for you, Tim, what have you been seeing out there in the equity complex at CME over the past month or so?
It's certainly been an interesting backdrop for the global equity index complex. I think, Marcus, some of the events you mentioned certainly have led to some increase in volatility and quite a bit of chop, right? I think it's the technical term we like to use in the equity markets these days. But I think what I'm honestly surprised and a bit curious by is the elevated levels of volume and volatility have somewhat persisted, even though some of the news, whether it was more macroeconomic driven around inflation or the introduction of a new variant of the coronavirus, it's persisting when you think about the volume, the volatility. It's not quite that pop, and then we see a retracement for 2 or 3 sessions. Here we are on the 7th of December, and I feel like we're in a very continued elevated volume and volatility state that really started just before Thanksgiving. So this is something that's interesting, and I'm sure a lot of fun for traders out there. As well as just increases. A theme that we've been pushing here at CME all year is index choice matters. In these type of index moves, in these type of index environment, the S&P and the NASDAQ and the Dow and the Russell are all behaving differently. So lots of products out there. And I think it was actually just the end of last week, our micro E-mini Russell 2000 contract, I think, had a single day trading record of about 440,000 contracts trading in the micro Russell. Which is phenomenal. I mean, that's, certainly multiples of, I believe, of the previous record. But again, index choice matters and lots of different size products to do here at CME. And it's going to be a lot of interest as we head into expiry later this month on the 17th and then into year end. Typically, this is the quiet week in December as we head into year end, but certainly nothing been quiet about the last few sessions. So it's going to be an exciting few weeks here as we head into year end.
And we got to wrap up here, but we have one question I kind of want to squeeze in before we go, Tim, because it kind of touches on the 2 hats that you wear day to day, which is equities and, of course, crypto. This comes in from Jose A. We've been getting a lot of variations on this question over the course of the past few weeks, which I guess is some indicator of what we're seeing out there in the markets right now. But Jose A. wants to know, he says, I'm watching all of these market developments over the past few weeks, and it has me wondering what the heck is going on with crypto, specifically Bitcoin. This product that was supposed to be its own beast and moved to the beat of its own drummer is now falling and rallying alongside the S&P and the Qs. Am I crazy? Is this just a short-term phenomenon, or is this a result of so many stock traders flocking into the crypto market? So this kind of goes back to a theme we've heard a few times now, Tim, from many listeners, which is, people are a little bit surprised especially if they're newer to crypto, that they're seeing the big major cryptocurrencies moving, as he points out, kind of in lockstep with the major indices. Obviously, you spend your day in both of these marketplaces. Have you been hearing similar queries or complaints from your customers over there? And what are your thoughts on what is driving the seeming interlinkage between these markets these days, sir?
Yeah, that's an interesting question. I would say still broadly speaking, notwithstanding some of the last trading sessions, I still think largely we're of the opinion crypto remains an uncorrelated asset. Although some correlations are maybe forming more strongly than others, largely speaking remains uncorrelated. Particularly when you look at Bitcoin as a deflationary asset in an inflationary time period. But I think what the other thing we've been hearing, and I think this really speaks to what we've been seeing the last few days, is in these type of market movements, when you're either seeing kind of the old school risk on, risk off appetite because of the familiarity of other traders, I think crypto is becoming some of that, getting swept up in some of that movement. If you're taking things off the table because maybe the equity markets are drawing down, you might be peeling back or paring back a little bit of everything. So I think right now in this type of market where there's a lot of shop in equity, I think you're just seeing similar personal habits from traders and institutions as they're deploying similar strategies as they would in equity or other asset classes to crypto in terms of how they're trading. I think right now it's more maybe a little bit risk on, risk off is maybe the tail wagging the dog, so to speak, rather than the fundamental, is this an uncorrelated return? So I think that's the way I would answer that question. And like we know in crypto, that might be my answer today, but likely to change tomorrow. So it'll be interesting to watch how these relationships continue to behave in these markets.
All right, Tim, that music means we've come to the end of our brief sojourn here through this quick hit on all things crypto and a little bit of equities mixed in there as well. But before we go, Tim, if anyone out there maybe has questions along these lines for you and your team, or maybe you just want to leave them with a hint, a tease of what they can expect from you and your team over there coming down the pike from CME, now is the time, sir. The floor is yours.
Yeah, so great catching up today. I would always suggest that folks go to cmegroup.com, a tremendous amount of educational resources and information for all things crypto, equities, as well as all the other asset classes we have at CME. And as we head into year end, I'm looking excited to wrapping up the year. And as always, we always joke around, Mark, stay tuned, because I'm sure, I don't know what it is yet. I'm sure I'll be back in the new year announcing some new and exciting products. Just encourage everyone to tune in next time I'm on the show and visit cmegroup.com in the meantime.
Well, you have a good track record so far this year. Every time you show up, you got some new market-altering development or product up your sleeve that we have to talk about, Tim. So your track record this year so far has been pretty good. It's going to be hard to match the BITO, but we'll see. We'll see what you guys can do over there. And stay tuned, of course, to the rest of the programming coming up over here on the network. Of course, after TWIFO, we have Vol Views on Friday. And then for all of you in the Secret Club, we have, of course, Options Oddities. And then back again next week, all the way through to another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.